Hey everyone, me Kevin here. In this video, we're going to do a roundup of 4 stocks that you should pay attention to or potentially not pay attention to. I'm gonna do this in a relatively quick style, so here we go. This is not a full breakdown of all these stocks, so I'm assuming you already know something about these 4 companies, but I'm going to give you some updated expectations and things that I'm doing. In the meantime, if you want 1 free stock, link for Webull down below. They will give you 1 free stock worth between $8 and $1,600, so at the bare minimum, you get $8 for depositing $100, and you get to take all that money back if you want. And check out the link for life insurance down below. You can get life insurance in just as little as 5 minutes. Okay, let's get started. First, we're going to talk about Nikola. Folks, a short seller came out and just absolutely wrote the most nasty hit piece on Nikola. That ended up leading Nikola to drop as much as 13% today. It ended up closing around 11% down, but then fell the extra 2% again in after hours. Nikola got slapped hard today, and it was probably because of this letter. And here's the thing, short sellers do this. In fact, there was a short seller, I think about 8 weeks ago, who did a hit piece on Enphase, and they said, we're suing Enphase for securities fraud and fraudulent accounting. That dropped the stock to like $37, and I'm like, that's a short-term buying opportunity for a good stock like Enphase. I'ma buy it. Nikola, I might have different opinions on. Let's go ahead and just take a quick glance at some of the overviews here because it's nuts. Take a look at this. This is the hit piece. Look at how this starts out. Today we reveal why we believe Nikola is an intricate fraud built on dozens of lies. We've never seen this level of deception at any public company, especially of this size. It's like that rhymes. All in a desperate attempt to catch up to Tesla and to harness the EV wave. We examine how Nikola got its early start, and we reveal how in the face of growing skepticism over the functionality of its truck, its hydrogen fuel truck, which that's the big thing, they're trying to expand battery technology and hydrogen technology. They say that Trevor, one of the executives and the founder, misled people based on the functionality of the truck because Nikola staged a video called Nikola 1 in Motion, which showed the semi-truck cruising on a road at a high rate of speed. But our investigation of the site and text messages from a former employee revealed that the video was an elaborate ruse. Nikola had the truck towed up to a top of a hill on a remote stretch of road and simply filmed it rolling down the hill. Folks, some of the stuff in here is harsh. Like, they argue here that Nikola was supposed to have some sort of proprietary battery technology, and instead now they're using GM's technology with the partnership they announced with GM, which when they announced the partnership with GM, I sold 80% of my shares because I don't believe in GM as an innovative company. I didn't base my sell 2 days ago when Nikola ran up on the announcement of that partnership based on this, because this letter just came out. But this is interesting. They accuse, and these are all allegations, but they accuse Nikola of saying they have in-house power inverters, for like solar. And then they show pictures of the Nikola building and go, we don't see any solar panels on the roof from like drone flyovers, and how they cover up the other inverters they have inside their factory from other companies with masking tape, cover up the label of them. Then they show, we present behind the scenes photos showing that Nikola had an electricity cable snaked up from underneath the stage into the truck during one of their presentations for their semi-truck in order to falsely claim the Nikola 1's electric system was fully functional. And then they even had an artist stencil on H2 and zero emission hydrogen electric vehicle on the side of the car. These are some pretty big allegations. And here they show not only the sticker, but then they also, or the stencil, I suppose, they also show, what is this odd cable here attached to your truck? Why is there a cable attached to your truck? That's odd, which you have to admit. And then they say that images that were sort of on the technology in here were all preloaded, sort of screenshots basically of static websites. Bad, like harsh here. Here are the screenshots where they go, Yeah. Here. Okay, here's the text message, which Kevin is not me. I promise it's not me. See, Nikola's chief engineer, Kevin Link. I asked Kevin how it was going to work, and he said they were going to tow it to the top of a super low-grade hill and then let it roll down. And so what this company actually did is apparently they went out to the site. See, this is what the video kind of looked like, and it's really hard to tell that that's a sloped road. It's not like it looks like it's on a hill. In fact, here's kind of just another angle where it's difficult to tell it's on a hill. But apparently they actually went to the stretch of the road where it has an average grade of 2.85%, with the first mile having a 3% grade, so it gets a little more speed. And this is what it actually looks like because their private investigator's vehicle was parked up top the hill, and kind of demonstrated it. Really kind of nasty hit piece, I have to say here. And I mean, there's some juicy things in here. I think I probably just showed most of the juice. For example, here's a satellite image showing, nope, no solar panels. You said there were solar panels. They even went as far as attacking the guy's brother, saying, here's the brother who apparently has stock in Nikola worth $110 million and is apparently the leader of infrastructure development for hydrogen infrastructure. And they show pictures of him in Hawaii at his prior job doing concrete work and concrete sort of epoxy flakes. So not really good. Not really good. In fact, here's that inverter. See, they took this picture here and said this is the actual part showing what brand this inverter is for a battery. And then here is the Nikola demonstration of that inverter. Like, why? Why is there tape on there? Now, in fairness, we don't know that this is at Nikola, but hey, like, it's a head scratcher, okay? And some of the things, with some of Nikola's history about, oh yeah, we've got all these pre-orders for semi-trucks. Yeah, but they're free pre-orders. Oh yeah. Some of the things have led people to sort of scratch their heads on Nikola. Now, the biggest head scratcher for me for Nikola has always been autonomy. If Nikola doesn't have their own proprietary automation, I'm just not interested. I'm making bets on a company like, Tesla because of the automation they have and that exponential learning that you're getting in those Tesla cars. You're not buying a Tesla, in my opinion, because it's the highest quality car. It's not like the most perfectionist. It's not like a Mercedes or a BMW, but the automation is on point. It's absolutely unbelievable. Now, that brings us over to the next stock. Let's talk Dave & Buster's. So here's the thing. I listened to the Dave & Buster's earnings call, and I also, of course, read their earnings release. I had a few hopes for this company. Dave & Buster's actually, I had a lot of hopes for it. One, I had hoped that Dave & Buster's would partner with malls to say, we're going in more malls. We're going to bring the mall back. We've got people coming back. This is all going great. Families are coming back. People are spending money. It's all going good. They're watching, the sports, which are finally starting to come back. They're watching sports at our bars. They're coming and spending money again. They're using the gaming machines again in areas that have reopened. And not much of that is happening. And this is very, very, very depressing. In fact, comp store sales, so like if you're comparing this year to last year, were down 85% at their stores. And this analyst at Jefferies on the conference call said, hey, I'm just wondering, what are your sales for August? How have your comp store sales been for August? Because this earnings report only covers May, June, and July. It ended August 2nd. And this Jefferies, the analyst, Jefferies, by the way, a company that's, they've put some money into Dave & Buster's. Anyway, a good amount. Anyway, Jefferies guy asked that, and I'm like, oh, that's a really good question, because it kind of gives you a hint into Q3 Dave & Buster's. And the analysts, or not the analysts, the executives are like, yeah, well, for August, we're down 75%. And I'm like, oh gosh, this isn't good, because in August, you had a lot more stores open for longer, and they're still down 75%. Not only that, but the other thing that's bad for Dave & Buster's, and I didn't write this part down, but they said that the people coming to their stores right now are younger and have a lower income and are more male. AKA, you're getting less families, you're getting more probably, teenagers or maybe college-aged people who aren't spending big, here, 5-year-old, go buy whatever you want kind of thing. So very interesting. This change in demographic is also not going to be very good for Dave & Buster's. That was their assumption. I'm not trying to be ageist. That was their assumption, that change in demographic isn't beneficial to Dave & Buster's. They're trying to get everybody in the family coming to Dave & Buster's, not just be, the younger person's hangout. Sure, they want that as well, but they also want your corporate parties, your corporate events. Not seeing many of those. They want the regular sort of bar crowd coming to hang out. Hey, 15-year-old Jimmy, go play the Halo game or whatever while we drink beer. Like, I get that, because that was me. I was 15-year-old Kevin watching or playing the Halo and the little, thing that goes around in the circle trying to win the whoop, whoop, whoop jackpot, right? That was me. That's why I love Dave & Buster's. I'm getting like tears in my eyes thinking about it because I miss those days. Days were simple back then. Here I am reading the stupid earnings for Dave & whatever. The point is, not good for Dave & Buster's. But the other things that were not good for Dave & Buster's, like you'll fall off your chair on this one. First of all, not this part, but I'm going to say this first as a preface. They sounded dead. Like the executives, they sounded like zombies on the call. They sounded so defeated. Right after this, or the Dave & Buster's one, I listened to the Peloton one, and these people were like chipper and excited and like, we love this company. We're like, don't call us a COVID company. We're not a COVID company. We're here to stay. Like that was Peloton, okay? Dave & Buster's was like, yeah, we just don't know. Like I could just imagine their boardroom meeting. How many months do we got left? It's not good. It's not good. So anyway, this was a big one, okay? They said, this is so bad for Dave & Buster's. They said, quote, society is now used to eating at home and watching TV at home. We have no idea when they're gonna come back. Oops, that's not good. So for Nikola, I said for Nikola, I'm out. Like Shark Tank, I'm out. Dave & Buster's, that didn't sound good, but I wasn't out yet. Now, in fairness to Dave & Buster's, they've got a good amount of cash. They've got about $224 million in cash, which is great, and they've got some more stores opening up again. But one of the analysts said, hey, like you said, your cash burn right now is $3.3 million per week, but isn't that gonna change in January when you start paying back all the like forbearance stuff that you took? And they're like, yeah. So in other words, in my opinion, their cash burn should probably be closer to 6. And this was what one of the analysts was asking as well, that their cash burn should be closer to about $6 million per week, which means Dave & Buster's at a $6 million burn per week right now has about 37 weeks left of cash, which divided by 4-ish gives us about 9 months, which means Dave & Buster's is gonna be out of money by around May of next year, which maybe things will be booming again, but they gotta get customers back to their stores. So they do have some room to breathe here, but this is the part that made me like fall out of my chair, okay? After them talking about how society is used to eating at home and watching stuff at home, then they were asked by an analyst, okay, well, what are you gonna do about it? And here's what they said. Well, we're gonna start investing into cloud computing games, and we're gonna launch a radio station, for the stores. We're gonna change the vibe of the stores. We're gonna, have like DJs, and maybe we'll do like giveaways and partnerships and stuff. And I'm thinking to myself, y'all dead. Like, those are terrible ideas. That's not what Dave & Buster's is. I don't go to Dave & Buster's for a DJ. You go for some food. You go to play some games. You go to have fun with your friends. Like, I don't, maybe I'm missing something. I think all of those things are stupid. I don't care about the radio station. I don't care about the DJs. I don't care about the giveaways. I mean, like, I want giveaways, but I don't care about the giveaways as an investor. Not excited here. Not happy at all. And for the lack of enthusiasm and for the stupid ideas, I'm out. I am reducing Nikola and Dave & Buster's to 0. It was nice while it lasted. It didn't go anywhere while it lasted. But at least a lot of us were able to sell again where we bought in, which was nice because obviously they've ridden a recovering wave up here. Had hope, didn't work out. Next. Okay, speaking of next, let's talk about Peloton. Peloton is next up on deck. So Peloton blew earnings expectations. beat expectations, initially fell like 6%, but then they started talking about their forecasts, their guidance for 2021. And I don't know if this is all hype, but their forecasts were really, really positive and good. I mean, they were jazzed about the potential for future growth of their company. And that's really, really good. So what I did is I went ahead and took their numbers, and I wanted to make this nice and simple and easy. So I took some of their numbers and then made a spreadsheet on these figures. So these are just some of the numbers that I was using and looking at. Just want to quickly show you here that their first quarter is their biggest. And this makes sense for any fitness company. The first quarter is going to have way more revenue than generally the middle summer months. And we look at this. In March, the quarter ending at the beginning of 2019, they had almost $100 million more in revenue. Well, they did $100 million more in revenue than the second and third quarter of 2019. So they've got a lot of fluctuation. Now here, they actually had more revenue in the second quarter than they did in the first quarter, which was really, really good. I mean, that's an impressive sign of growth. So if this company, this is how I based the numbers. I assumed that maybe this company can keep growth going post-COVID. That's the big asterisk, is can they keep growth going post-COVID? And can they double their quarterly consistently? And so if we do that, we get to about $4 billion in revenues per year. That's assuming $500 million in revenues per quarter. And then I took about a fifth of that for subscription revenue. That would leave this company making about $5 billion. If they make $5 billion with a higher margin, because they just introduced a cheaper bike, they introduced a cheaper treadmill, so their margin is going down a little bit, their expenses are going up a bit. Ignore some of these percentages here. Those don't really matter for our purposes. They're expecting to have somewhere around a 41, 42% margin. So I did this in reverse and I looked at expenses here. Anyway, bottom line, if they can generate these sales and get to $5 billion in sales, it wouldn't be unreasonable for them after all of their expenses, especially if they kept some sales, marketing, and administration and research and development, if they kept some of those a little bit more constrained and they just sort of naturally grew, it wouldn't be unreasonable for this company to net somewhere around $830 million. If they net around $830 million, they might in the future, at the end of 2022, have somewhere around an earnings per share of about $251, which at 40 times earnings puts them at about $100 a share. And this is a very bullish thesis here. This assumes this company is going to double, more than double, slightly more than double by the end of 2022, which hopefully the pandemic and everything is over then. I don't know if they can pull that off. If they can pull this off though, my buy target for Peloton is under 80 and they just jumped up to $96 a share. You would have to really be bullish, in my opinion, to be buying them above $80 right now. I really liked Peloton based on its last earnings, under $60. Now I'm okay under 80. The more under 80, the better. Like if I see a 70 again, I'd rather go bigger then, because I don't know if they're going to be able to sustain these sorts of revenues. Peloton has a lot of growth baked into it, so be careful investing in Peloton over 80. I'm in Peloton and I'm staying in Peloton, but I'm not going to go heavier on Peloton. Now, let's talk about Tesla. So I made a new spreadsheet for Tesla. We'll just do this one pretty quick. We've done this one frequently. And a lot of people have been asking me for this because they say, hey, how can you value Tesla? Like its PE ratio is so crazy. It's forward PE ratio, like blah, 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 blah. Okay, let's just do the numbers. This is how I look at Tesla. So I did an updated spreadsheet on this. I talk about this sort of in the money and finance course too, in the stock course, which is linked down below along with the other courses. But anyway, if we have a revenue per vehicle at Tesla of about 50,000 and we end up getting to just 1.8 million cars delivered by the end of 2022, that's actually lower than we expect. We really think we can get to about 2 million cars by the end of 2021. So I'm kind of doing like a middle of the road case scenario here. I think Tesla can deliver way more cars than this. I think by the end of 22, we may be closer to 3 to 4 million cars delivered and produced. Well, I guess produced and delivered is the correct word order. But let's just say they only get to 1.8 million vehicles. In that case, they're probably likely to see revenues of around these ranges, around $100 billion in total revenues. We've got some margins. They give us the margins. I'm estimating that the expense, their profit margin on the Tesla sale vehicles is going to be somewhere around 25%. That makes their expense ratio around 75%. And, I did some other estimates on other things. We include the tax rate here. I also included, just to be like really conservative on Tesla. So to me, this is a very conservative spreadsheet. Unlike the Peloton one, I'm going conservative here. I also included a higher corporate tax rate in the event Democrats sweep and raise corporate taxes. So I changed this from 21% to 35%, just to really buffer this. Elon Musk, he thinks the profit margin can go up to 30%, which would create a lot more profit at Tesla. The corporate tax rate might go down if Trump gets reelected. They might make more vehicles. See, I'm being really conservative on this spreadsheet on purpose. By being conservative at a price to earnings ratio in the future of $40 per share, then in my opinion, it would be reasonable for Tesla to sell for somewhere around $479 at the end of 2022. This would be reasonable in a bearish scenario, which that means if I invested today at say 380, I'd make about 8% on my money. This is to me bearish for Tesla. Some people would say, Kevin, you're still being way too optimistic and still way too bullish. I don't think so. I think, I've got a lot of really worst cases built into this, low on production numbers. I mean, we've got enough gigafactories to produce 500,000 vehicles at each gigafactory, which should easily get us to 2 million vehicles. So going with 1.8 by the end of 22, reasonable in my opinion. The margin, I was reasonable. On the tax rate, I'm trying to be conservative. On the price to earnings ratio of 40, I think that's fair for a company with all the autonomy that they have. So this is to me a very fair estimate. Now, just to do that maybe as well to Peloton, if we go ahead and adjust Peloton, we pull up the Peloton spreadsheet again, and we go to, hey, you know what, Peloton, y'all had your run, y'all were great, but you know what, we're not going to say your revenues are going to double. Maybe they'll go up, but we're just going to go with $3 billion in revenue instead of $4 billion in revenue. That's going to be closer to around 700 mil consistent over the next 2.5 years, or at the end of the next 2.5 years. I could see that happening. Let's say they get their margin down a little bit, so we'll reduce their expense ratio just a tad on their fitness products. So that's what I just did here. We changed this to 3 billion. We reduced their margin here a little bit. But you know what? Let's say in order to get these sales, and again, ignore these percentages here. In order to get these sales, we're going to have to up sales and marketing. So let's take sales and marketing to $1 billion. Okay. That puts us at a net of 20 mil. Oh, that's going to be ugly. I think maybe I shouldn't do sales and marketing at that high. Let's do sales and marketing at 650. 65. Let's change that to 650. There we go. Okay, that leaves us with a net of somewhere around. Okay, this is more reasonable. That leaves us with a net of somewhere around $370 million, which would, at a price to earnings ratio of 40, put the stock at about a $44 stock. That's around when I went heavy on this company. So you can see there is a ton of growth baked into this company. So if they don't meet their numbers, and that's what I'm trying to show off here with the numbers, if they don't meet their numbers, it's not going to look good. On the flip side, Tesla looks good, even in my opinion, in more bearish scenarios. So I'm going to hold my Peloton, but I'm not going to add to Peloton. I'm going to sell Nikola. I'm going to sell D&B. They may go up in the future. I don't care. But I'm happy having Tesla as one of my highest ratio stocks. So there's your breakdown of these 4 stocks for the day. I hope you appreciated this and found this insightful. If you did, please consider subscribing. In the meantime, have a great day.